I'm now joined by Lorraine Hutchinson, the senior retail analyst over at BofA Securities. Lorraine, this holiday shopping season could be one that is impacted more severely by tariffs. Just how important is this SCOTUS decision on the retail universe that you cover?
The decision is really, really important. It may be a little too late for the holiday season, though. Most retailers right now have already received the product that they'll sell for holiday. So they have paid tariffs on those, and they have set pricing for those products. So what we expect to start hitting the shelves over the next few weeks is apparel and footwear coming in at higher prices to pass some of that tariff cost to the consumer. This week's ruling could be very important for the go forward of the retail business, but I think for holiday, what we are expecting is some higher prices, maybe some lower unit volume as the consumer reacts to that. And I think a lot of question marks around the potential elasticity of demand based on these higher prices.
How does your job flow, your workflow change when and I should say when and if the Supreme Court actually makes its ruling? What exactly does that then do? How do you have to remodel things in the event that these tariffs are either struck down or upheld?
Well, if they're upheld, we don't make any changes because that's what's forecast in our models right now. If they're struck down, there is another potential under Section 122 of the Trade Code that there could be a 15% tariff put on goods for as much as 150 days. So we'd have to see if any other tariffs are enacted once these are struck down, and then we'd have to change our models accordingly. Right now, I would estimate that apparel and footwear retailers are paying an incremental 20% tariff for their holiday goods. So at 15%, it's better. It's just not that much better. So we'd have to adjust and tweak as we see fit. But we're waiting for that ruling, and then we're waiting to see the reaction post the ruling to determine what kinds of changes we'd make to the models. And in the meantime, it's a lot of scenario analysis.
Sure. So, Lorraine, one of those scenarios could play out into just what profit margins look like if this regime is held with these tariffs in place. How exactly do you feel as though the consumer is positioned to absorb any potential price increases? Will we as consumers writ large be open to paying those higher prices and preserving corporate margins, or do you feel as though there will be a discounting regime that has to happen in order to catalyze buyers to actually get out there and make a transaction?
I mean, I think the difficult part of my coverage universe is you don't really need anything that they sell. So the consumer has a choice if they want to spend the money on that article of clothing or that piece of footwear. So I think what will happen is those with great brand heat, really innovative product, may be able to raise the prices and still get the full price sell-through that they're expecting. If you have an undifferentiated product, a basic that the consumer feels like they can go without, I think that's where we'll see the problems once prices start going up. So our concern around our group going into this holiday with tariffs hitting is there's a lot of things you do need that will be more expensive. So the things you don't need as much of, you may really tighten the belt and try to spend less.
Lorraine,
so I think that puts margins at risk for the group.